Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome. You're watching Countdown right here on Bloomberg Quint Live. The week has started on a fairly soft note. You've got the Nifty giving up 1.3% this afternoon, followed by banks. You've got most of your sectoral indices trading in the red. Individual stocks are what's gaining attention in today's trade, and we'll talk about all of that and more in just a few moments. Markets continue to witness selling pressure. The Nifty falls towards the 10,650 mark. Most of the sectoral indices are trading with cuts. Broader market underperforms. Zee Entertainment rebounds from Friday's sell-off after the management clarifies its stance in a conference call. The stock is the top gainer on the index. Adani Group stocks barring Adani Enterprises and Adani Transmission are witnessing sharp cuts in trade today. And Jet Airways will seek shareholders' approval to convert loans into shares or convertible instruments in its meeting on the 21st of February. Good afternoon, Neeraj, and it looks like today the day has really culminated into something that we wouldn't have anticipated if we were to look at the past performances.
Yeah, but and again, you know, the same fears rebounding of sorts or coming back to the fore again. About 1.5% lower on the Nifty, which is fine. It could happen on any given day. The Nifty Bank, the banks and the NBFCs are the ones which have corrected quite steeply in the session today. And I'm sure they will highlight a bunch of those. But keep in mind, I think the heat map, which will come up on your screen, will tell you the peer problem. Bajaj Finance out here, down about 7%. And you know that when Bajaj Finance is down about 7.5%, the rest of the NBFC clan would be being taken to the cleaners. And it is not just that, by the way. Indiabulls Housing Finance 6% over. ICICI Bank is down on the 5.5%. FinServ down about 4%. It's financials which are essentially dragging the indices lower. A lot of pressure on the Nifty Bank and the non-Nifty Bank financial names as well under serious pressure in the session today. A large portion of action at the broader end of the spectrum, but this row by itself tells you the kind of mood that the market is in today. This has got no connection to global factors, by the way. It's all got to do with the local factors, and if the markets were able to climb the wall of worry when it came to ILNFS, I think the Z issue is kind of set the cat amongst the pigeons, and it's clearly showing in the way the stocks are buckling down under pressure. Zee Entertainment by itself is up about 12.5%, but remember that's a stock that's corrected quite strongly in Friday's session and in the run-up to Friday as well, has corrected quite a bit. So a bit of a bounce there. L&T, TCS, a few others are okay, but essentially a lot of pressure out here, and a slate of corporate-facing banks and NBFCs under some serious pressure. Not to forget Adani Port, which has remained the top loser, and it's showing in the way the mid-caps have reacted as well, Devina. Adani Group stocks, NBFCs, they kind of make the bulk of the losers today.
Yeah, and you know, a few regular features there, which like HEG and Graphite on a daily basis, they've been dropping. And I'll talk about all of that and more, but the indices for themselves with cuts of about 2.5% for the mid caps and small caps. So it's a fairly gloomy day this afternoon, at least in the session. Let's take a look at individual movers, and we're talking about the Adani Group stocks and the reaction to thereof. So Adani Enterprises was down in intraday trade. That has picked back up and come back into the green, but the other two, that is Adani Ports and Adani Power, still continue to reel under pressure. 14% cut for an Adani Power. Heavy sell-offs have been seen since the last few days in stocks like HEG and Graphite, and that continues to bear down on these stocks in today's session. In fact, for both these counters, the last 2 weeks have been particularly brutal, and they've lost about 35% in the last 2 weeks of trade. Stocks trading at or near their 52-week low. We've got the stock like Bharat Forge after today's 1.5% cut is trading very close to its 52-week low. Avanti Fee is down 6% today, and so is TVS Motors. In fact, TVS Motors has been making new 52-week lows over the last two trading sessions. Volume buzzers, Diwan Housing trades 2 crore shares. The stock is down heavily, about 10.5% given up for DHFL. Indian Bank's down about 9%. That trades about 45 lakh shares, way higher than its last 20-day moving average. And Sterlite Tech 2 is down 7.5%. That trades about 20 lakh shares in intraday trade. But let's take a look at what's been happening in the futures and options space. Agam is joining in for that. Agam.
Well, the selling pressure certainly increased over the last 1 hour in trade, with the Nifty now trending down by as much as 1.3%. It's the same for the Sensex. The Nifty futures actually do see very little traction, but we must remember that it is expiry week, which is why we aren't seeing as much traction in the January futures. The selling pressure is just as evident as in the Nifty banking futures too. As you can see, we are looking at declines of as much as 4.5% when it comes to its open interest. The banking index down by around 1.3%, 8%. Your VIX has risen quite substantially, now inching towards a mark of 20. It's already above the mark of 19, up 7.7%. In terms of your open interest distribution, as one might expect, more writing around the 11,000 and 11,100 mark. But where does it keep, okay, so that's your open interest distribution. So clearly, it's unlikely that the 11,000 mark will be taken out in this expiry. But that said, we really don't know where the downside is, considering such a decline in open interest for the puts. Considering we have lost out on 10,700, which as on yesterday did have max open interest. But moving on to stocks then, and a lot of stocks under pressure today. We have Piramal Enterprises, that's down 5%, shorts there. Among others, we are also tracking Adani Power. Look at this one, it's down 14% now, unwinding coming through here as well. Indiabulls Housing Finance under pressure, that's down 7%. Two longs, shorts coming in, and Vodafone Idea among others. I'm also going to keep an eye on Bajaj Finance, because that one is also seeing a lot of pressure in today's day of trade. On the whole, not turning out to be a very good session.
Not at all. Agam, thanks for putting that into perspective. It's NBFCs galore, the ones which are correcting and correcting very, very quickly in the session today. Agam pointed out Bajaj Finance. Just look at that entire space, and it's a sea of red. Diwan Housing Finance, Indiabulls Housing Finance, that whole pack has just fallen off like a pack of cards. Steep falls on very, very high volumes. Not looking good. The globe is looking maybe reasonably okay compared to how India is looking. Let's get in Hans Goetti. He's independent research consultant, joining us on the show now with his thoughts. Hans, good having you. Thanks much for joining in. A bit of a near-term dichotomy between what India is doing vis-a-vis the rest of the EM pack or the world might be doing. But what's your approach? It's a crucial week with the trade talks lined up on Wednesday as well. How do you think things shape up for world markets?
It's a crucial week for two reasons. You mentioned trade, that's important, but what is even more important is what the central banks are going to do from here on. I mean, what's pretty clear now is that the Fed has made a 180-degree turn. As shortly as 4 months ago, Jay Powell was talking about how strong the economy was, how many times they're going to raise rates. And now the talk is that they may actually pause in March. It may be done raising rates altogether for this cycle. What we're looking for this week possibly are hints as to the balance sheet reduction by the Fed. That is coming to focus as well. The Fed has told us it's going to be on autopilot, but it looks like they're going to either slow it down or abandon it altogether. And I think that's something we are keenly watching.
Okay. Hans, from an India, I don't know how closely you've looked at the local issues in India compared to what you used to in the past, but from an India-specific view, one, the valuations the way they are, and two, the fact that we are in the midst of what is the run-up to the election season. How is India shaping up compared to some of the other options that a world investor would have?
Well, we look at India these days in the context of emerging markets. And of course, emerging markets are dominated by China, by India, by a few others. And I think emerging markets have been suffering because of rate hikes and because of a stronger dollar. And I think if the Fed actually pauses, I think we could see a better undertone in emerging markets altogether. India-specific factors notwithstanding, you're right. I mean, the election is coming and a lot of other stuff. But we think that if the Fed is actually done tightening and the dollar weakens in months ahead, I think it will be a very positive backdrop for emerging markets, especially given the fact that valuations are very reasonable compared to developed markets.
What risks do you see, Hans, with regards to fund allocation to India now that we are seeing a lot more volatility?
Well, I think it's a question of whether we're in a risk-on or a risk-off environment. As a foreign investor, you go into emerging markets, India and so on, in a risk-on environment. And I think we're going to have a lot of volatility in 2019. First, the prospect of a recession, not only in the United States, but also parts of Europe, is looming large. And therefore, I think there is an increasing trend towards risk-off. So that means emerging markets, inclusive India, will probably be a little bit on the back burner as far as foreign investors are concerned.
Looking at what we're anticipating in terms of global growth, the outlook there for FY19 and FY20 has been trimmed by the IMF, but marginally. The emerging market growth outlook as well has been trimmed slightly from 4.5%. It's been brought down a few basis points. Does that concern you?
Well, yes, of course. As I said, there's a good chance for a recession in the United States, which will drag everything else with it. I mean, we have recessionary conditions in Italy. We have some close to recessionary conditions in Germany. China is slowing down. Japan is pretty slow. So I think the global slowdown is for real. And I think it has to do with the fact that the Fed has tightened interest rates, has hiked interest rates 9 times this cycle, also decreased its balance sheet. And policy tightening works with a lag. And we think that even if they loosen up now, they may not be able to avoid a recession. So we think that over the next few months, it will become evident that global growth is slowing even more. And I'm not quite sure whether financial markets are fully positioned for that.
Okay. We'll leave it at that. Hans, thanks so much for taking the time out and joining us and giving us that perspective. Really appreciate your time. Well,
thank you.
That's the view on the world and India within the world, but India within the world today is not looking all that pretty. More so not the headline numbers, but what's happening at the broader end of the spectrum with financial stocks cracking big time. ICICI Bank is down 5.5%. We'll get in Mr. Sanjeev Bhasin in moments from now to talk about this. ICICI Bank cracking about 5.5%, but a lot of other NBFCs too have come off quite rapidly in the session today. Can we get, okay, let's go across to Mr. Sanjeev Bhasin of IIFL, joins us right now on the phone line. Sanjeev, thanks much for joining in. I reckon a part of this fall, or maybe a major part of this fall, is due to the worries that would have come in as a result of the Z issue.
Correct. So first you had Sun Pharma, then you had Reliance, the ADAG group called foul, and now you have Z. But don't paint all companies with the same brush. I would say Z has personally mortgaged his shares, and he's agreed to a lot of his problems, and he's willing to sell part of his stake to replenish the. So in businesses where stakes are to be held mortgaged are obviously places where you need our high capital intensive industries to name the Adanis for a. So I'm not making the case that this is all is hunky dory. All I'm saying is that these are businesses where these type of acts are going to be part of the businesses. So markets are making too much and bears are having a field time due to the double whammy of election, of budget and the expiry. I would think that most of these businesses are extremely well run, and you should be buying the blue chip companies because we think this fall is more out of fear rather than actual.
So Bajaj Finance at 2,400 now is a value buy, Sanjeev?
Definitely, Bajaj Finance, M&M Finance, look at the credibility of the names. Why would you, L&T Finance? So everything cannot be tarnished with the same brush. And like I said, Divina, these are again fear. Fear is the best time to make your portfolio. Select auto stocks like an Ashok Leland or an Ashok. So I mean, there's a whole host of stocks which I can go on. Coal India, which has came out with an OFS, and the stock company is doing extremely well. I would see this results will be standouts for Coal India. But the markets are discerning. They're trying to paint everything, whether it's PSU or some of the NBFCs with the same brush. I think this is a very opportune time to build your portfolios or at least stay invested, because this may not last for more than 2 days. I would expect by day after tomorrow or maximum Friday, market should see a turnaround.
Sanjeev, what's happening at your desks? Are clients coming out and selling either on future side or on the cash side any of these NBFC names? Because frankly, one, a lot of large NBFCs, Indiabulls Housing Finance, Bajaj Finance, etc. have fallen, not just the mid-sized ones. And two, some large banks too are correcting quite strongly today. ICICI Bank, a case in point.
So, Neeraj, that is part and parcel of some of the, selling which is there. Some of the institutional desks are definitely have sell orders, and these become basket stocks to sell. These are the best stocks outperforming ICICI, Axis, and now there is some profit booking ahead of the expiry, like I said. So there are 2-3 factors. One is the expiry, one is the over leverage, and so on. But I think that's a cleansing out process, which is a regular feature on every expiry, and you realize that shorter term pain is always going to be longer term gain. So I think we have a mixed bag of both sides. We are recommending very strongly to build portfolios. If I could name a few stocks, it would be Ashok Leyland, Eicher, JSW, Coal India, and CG Power. I think these 4-5 stocks are very, very going to come out with very good numbers, and these are very good times to buy these stocks.
Okay. Sanjeev, my final question, save for Bajaj Finance and M&M Finance, any of the other NBFCs, are you recommending that it's better not to go ahead and touch those? Because, well, if Bajaj Finance and the others are falling, I'm guessing there's a time to buy the others. So right now, go in for the quality names.
Correct. Always stick with quality and you'll never go wrong. And Bajaj Finance, Bajaj, both the group and the father and the son are so tight-fisted that they won't let anything go beyond control. So I would say this is the best opportunity you have. By the way, I would expect that this global rally, which has been outstanding in January, only to gather further steam. And I think China, the Hang Seng Index are going to be outperformers. So it's about time India started to join the act. Maybe we'll see that after the budget if needed. Okay?
All right, Sanjeev, we leave it at that. Thank you so very much for joining in. A quick take from Sanjeev Bajaj there on what's been happening in the NBFC space, and not just the NBFC space today. It's been, a more broad-based sell-off that's come into financials as well. Banks, particularly even private sector banks, Yes Bank, ICICI Bank, they've all bled out somewhat in today's session. Let's talk about the Q3 performances then, and it was a strong third quarter for Genus Power. Revenues grew by 46% compared to last year, while EBITDA nearly doubled. Margins saw an expansion as well. As per their investor presentation, their order book has swelled to over 1,400 crores. Let's discuss the quarter gone by with Mr. Ishwar Chand Agarwal. He's the executive chairman of the company. Mr. Agarwal, thanks very much for taking out the time. Do you want to run us through the details of the quarter first off, and what were the highlights?
Yeah, in the last quarter, we hello.
Yeah, we can hear you, sir. Go ahead.
Yeah, in last quarter we make a turnover of 292 crore, and in the 9 month it is 754 crore. And earning is also 23 crore last quarter, and in 9 months it's 49 crore.
What has contributed, Mr. Agarwal, this time around to the doubling of the EBITDA as well as your strong margins, and are you expected to, repeat this performance in the subsequent quarters, and how would you end the year?
Yeah, we will end the year, I think about 1,150 crore revenue. Accordingly, the margin will also.
Okay, so you're talking about a level of about 12-13% as being the margin that you could clock in for the rest of the year as well?
Yeah, this will increase 10%, 5%, 11%. Yeah, you can say.
Okay, let's talk a little bit more about the order pipeline, sir. And while your order book currently stands at 1,400 odd crores, what's the target by the end of the year?
Out of 1,400 order, 1,000 crore order the next week will be here. 1920. About 400 we will make up in this quarter.
Okay. So what's the target by the end of the year?
End of the year revenue target?
No. Order book target.
The order book target is whatever we supply this quarter, we'll give that.
Okay, got that. Mr. Agrawal, thanks very much. Quick take there from Genus Power on the quarterly performances. A good quarter for them. They said that they are going to be able to manage to keep up the good run rate that they have seen. Around 11.5% in terms of margin picture is what they will consolidate at. About 1,100 crores of revenue is what he spoke about by the end of the year. That is Genus Power talking about their performance. The stock, though, is down about 5% right now. Another focus then on Jet Airways, the other debt-trapped company, has called for an extraordinary general meeting of its shareholders seeking permission to convert some of the debt into equity. Sumeet Sarkar, he's done some calculation and a math on what this conversion could mean for retail investors. Sumeet.
So if you see, Jet Airways has called for an extraordinary general meeting on Feb 21st where it will be seeking shareholders' approval to convert part of its debt into equity shares or other convertible instruments. Now, for this purpose, the company is also seeking approval from shareholders to increase its authorized share capital limit from 200 crore to close to 2,200 crore rupees. Now, the company proposes to expand its equity base by nearly 4 times, while the preference share base is being expanded by nearly 76 times. Now, the possible reason why the company must be expanding its preference share base higher than the equity share base, that could be because of the 49% regulation cap on foreign holdings that is there for Indian Airlines. Now, Etihad currently owns close to 24% stake in the company, and the company also separately has owes close to 5,000 crore rupees to foreign banks. So preference share route could be used by the company to infuse more funds and to convert some of its debt into that part of the shares. Now, according to an ICRA note, the company had a debt of close to 10,964 crore rupees, and a conversion of around 50 to 70% of this debt into equity would lead to an equity dilution of close to 65.6% to close to 72.8%, according to Bloomberg Quint calculations. So this is a huge part of equity that will be diluted if the company goes on to convert its debt into equity.
All right, that's going to be an interesting turn of events and something that everyone's going to be watching out for what comes out of that meeting on the 21st of February. Sumeet, thanks very much for highlighting that for us. That's Jet Airways for you. Should pull up the stock to see how it's performed over the last 1 month or so, because we've been constantly tracking about what this resolution plan is going to be for Jet Airways in order to make sure there were meetings between the company and lenders, and they were seeking a resolution plan, and this is probably what is going to come down to. 1.68% for Jet Airways in today's session, but in the last 1 month, given up about 10%. So no major bigger moves here in the last 1 month, but nonetheless, it's been on a downward sloping trajectory. Let's talk about 2 stocks, which have, over the last few days, completely eroded shareholder wealth to the tune of about 35% in a matter of 2 weeks. So both HEG and Graphite India have seen this correction, and concerns of lower electrode prices have actually been the reason behind this, and coupled with that, the rising input costs seem to have hurt sentiment. Nikki Mirchandani, she's here with us to take us through what exactly is causing this spiral roll for the companies HEG and Graphite India. Nikki.
Devina, HEG and Graphite India continue to remain focused. I remember we're trying to have this discussion from a long time, and finally we've decided to take up the 2 stocks because they've continued to be in news. 30-35% lost in the last, since the start of the January for 2 of these stocks. Not good going for the company. HEG, in fact, in today's session of trade, has slipped in more than 19.5% in trade, which is the worst level that we've seen technically for the stock from Jan 2008. And in terms of Graphite India too, the move has not been that heartening enough for investors. I think the decline coming coming in at 13.9% is the most that the stock has since May 2014. Effectively on YTD basis, it's a 35-40% loss that the investor would have to take, or hit that the investors would have been taking had they been holding this stock in their portfolio. It's a double whammy of stocks for graphite electrodes right now, because the graphite prices have been falling on account of the lackluster steel demand that we are facing from steel sector as a whole, and also the needle coke prices, which are the key raw material, they've been on an uptick. Effectively, the UHP prices have been lower by 10 to 13% since in the first half of this calendar year, and Phillips 66, which is the major provider of needle coke, has raised in the needle coke prices offers to China by as much as 24% in the first half of 2019. Overall, on year-on-year basis, it's a 68% uptick coming in for needle coke prices that we have. And if you look at the margins that the analysts are estimating with, it's a closed door industry. Very few analysts actually tracking the counter, but they're actually looking at a revision or a contraction of more than 100 basis point kind of a downtick coming in on the margin performance of this company in Q3 FY19 itself. The story could be worse, could get more worse than what it is right now in the coming next 2 quarters, given that the lag impact of these inventories or the prices of the inventories would start reflecting upon the financials of these companies.
All right, and that's a very grim picture right now for both these counters. Remember, a target of 5,600 put out by Bank of America Merrill Lynch a few months ago for HEG saw the stock move up from levels of 3,600 to about 4,400. From there, a complete collapse. The stock right now buckling under pressure. 2,200 on HEG. Graphite is at about 502. Moving on, but keeping it with the same space, Tata Steel has just announced a plan to divest some of its stake in South Asia held by a subsidiary. The move is aimed to cut debt. Nikki is still here with us. Nikki, update us on the same.
By as much as 1.5% in trade today. This is despite the announcement coming in that the company is divesting its Southeast Asian business to one of the groups which is known as HBIS. According to the announcement, the company would be first divesting 100% stake in Nat Steel and 60% stake that it's hold in Tata Steel Thailand into a holding company, of which only 70% will be sold to HBIS, and Tata Steel will retain the remaining 30% stake, for which it gets $327 million. Now, this is for the 70% stake that it will be divesting, and the stake sale is expected to be completed in a span of next 3 to 4 months. If you look at the overall EBITDA or the turnover performance of SEA business to Tata Steel on consolidated level, doesn't really contribute too much of it. 7% in terms of turnover and almost 2% in terms of the EBITDA performance on consolidated level. What the deal has done typically, and how it's been, why has it been done in the first place? The deal is first done in order to shift for the company in order to shift back its focus on domestic market. The 30% is retained so that the company can go ahead and catch the opportunity if in case there is an upside which is seen in these markets. And also the company in one of its con call to the media industry said that it at any given point of time is not ruling out the chances of going ahead and giving an IPO of for the 30% stake right now that it is retained in the company, but that would be after the time span of nearly 3 years that remains to be the lock-in period for the company. How much effectively would the debt come down with this deal? The total enterprise value is around $685 million. Of which $150 million is the debt, and the company gets around $327 million by divesting this stake. So $450 million effectively percolating in Indian currency to the tune of around 3,200 to 3,800 crore. And with that, the gross debt post-deal is expected to come down to 1,14,000 crore from the level of around 1,18,000 crore that we saw in Q2 FY19.
Right, Nikki, thanks a lot for that. So that's a lot that's happening within the metal space. And let's talk about all of this and more and get in a few chart checks as well. Joining us right now, we've got Hemen Kapadia of KRChoksey. He's joining us on the show. Hemen, good afternoon to you. And it's been a rough ride over the last few days for the index particularly, and specifically a few of the index stocks. I mean, we've never seen such major gyrations on the index where stocks have lost 7 to 10%. In the recent past, and it seems to have become more of a habit now for these index stocks to lose the kind of sum that they are losing. What have you made out of it?
A very good afternoon to you, Devina. I have a feeling that we've had a very narrow move, the move from 10 to 11, and even in the last couple of weeks, Devina. Last couple of weeks, we've been riding shotgun on Reliance Industries, a 15% move, and everything else was pottering around doing nothing. The world markets have taken a breather. France, Germany, US don't look like making new highs. We've entered a corrective phase of a greater degree, so I know unless something like a QE4 comes in, Devina, it's bad, and I don't think, and the mid caps, small caps continue to flounder. In fact, they go down, so the market breadth is negative. Last Monday itself, the VIX had spiked up, Devina. We spoke about that last Monday, and it has remained firm throughout the week. So the Bank Nifty was on a rising wedge. It gave a downward breakout. So frankly speaking, nothing particularly seems to be happening. There was a pullback, which now seems to be exhausting itself. So I think, like you said, it's become a habit. This is probably, I think this is a sign of times to come. Probably the whole calendar year is going to go this way.
Okay. What about your index call, Hemen?
I'd sell the 10,500 puts, Devina, because a lot of OI over there, and this OI has been omnipresent since 1st December. So frankly speaking, and we've come off sharply in the last few days. So sell the 10,500 plain vanilla puts and nothing else. Okay, we have a event risk, but that's probably a vote on account. We have the derivatives expiry. So that's only going to add to the mayhem and confusion. So plain vanilla, 10,500 put selling.
Okay. We'll just go across to Sumeet as well, but I think I just want to address some of those numbers that are coming out. Wokhart is reporting its Q3 numbers. Revenues have gone up marginally by about 4% coming at 1,046 crores versus 1,005. You've seen a net loss of 71 crores this time around versus a loss of 41 crores. EBITDA is down 59%, and that's just a cliff fall for the stock. Margins have been under pressure, and a significant drop in the margins have come in. 1.8% is what they've clocked in versus 4.6%. And the reaction to the stock is warranted. I mean, a fail on the earnings and you can't be spared. And that's the market mood right now. 440 on Wokhart, that's down 8%. Joining me right now, we've got Sumeet Bagadia as well of Choice Broking, who's joining us on the show. TS Harihar also joins into the discussion. Gentlemen, good afternoon to you. And before I go to TS, I just want to go to Sumeet, get his index strategy, and then we talk about stocks as well. Sumeet?
Hi, good afternoon. What we are seeing is selling pressure on Nifty and Bank Nifty. There is a possibility that some more weakness can be seen, in which we can see levels of around 10,600 of IT in Nifty. And as far as Bank Nifty is concerned, we can see levels of around 26,500. But overall, it seems that a correction till 10,600, 10,500 level should be used as buying opportunity, because Nifty has given a sharp correction. Now it looks oversold, and from here on we should see some pullback or some recovery in both the indexes. Nifty 10,700 has the resistance for Nifty is placed at around 10,700 levels. Once the resistance is taken out, we can see a move till 10,800 levels. The overall range for the index is placed between 10,500 on the lower side to 10,800 on the higher side. This would be the immediate range for Nifty. As far as Bank Nifty is concerned, 26,500 is support for Bank Nifty, and 27,000 is the resistance level. Either side move will give either side breakout will give a good move in Bank Nifty too. I think Bank Nifty will hold supports of around 26,500 levels, and from here on, we should see some pullback or bounce back move till 26,800, 27,000 levels.
Okay, got that. Let's talk about some stock calls as well. So, Hemen, for one, has got a call on Sun TV and a call on Lupin. You want to run us through them, Hemen?
Yes, I think I went in for one defensive and one safe stock. Sun TV has been pummeled, frankly speaking, Devina. deeply oversold, positive divergence. There has been volume spiking up at lower levels. I am assuming those are stronger hands buying. But anyway, if you're looking for a corrective bounce, buy in Sun TV it's moved up a bit, frankly speaking, since I gave the call. At 515, 507, target 531. Second one is Lupin. IT and pharma seem to be the only redeeming factors in the market. So buy on Lupin at 862, stop loss 857, target 872.
You want to revise the Sun TV target?
I guess so. I'd like to revise. I mean, it's so I'd probably make it to 520, 518, and 536 target.
Okay, so revise the target upwards to 536 instead of 531. That's Hemen's calls on Lupin and Sun TV. Sumeet Bagadia, what are your stock calls?
Two stocks for the day. First one is on buy side, and that is TCS. TCS is looking good to me. Stock has given a good move in last couple of days. Immediately the resistance for the stock is placed at around 2000 levels. Once the stock is able to break 2000 on closing basis, we will see a move till 2050 or 2100 levels. So for a trading perspective, one can initiate long positions in TCS at the current market price, with the stop loss to be placed at 1870 on lower side for the upside target of 2050 and 2100 levels. The second stock for the day is on sell side, and that is Bata. Bata looks weak on charts. It has given a correction in last couple of days, and today it seems as the correction has extended for the targets of 1040 levels. For a trading perspective, one can initiate sell positions at the current market price, or on rise till 1110 should be used as selling opportunity, with the stop loss to be placed at 1140 on high side for the downside target of 1040.
All right. TS Harihar is also here with us. Those are some calls from Sumeet Bagadia. TS, what have you been making out of this mayhem over the last few days?
See, I think as far as Z was concerned, I think I was there on a show last week and I was mentioning that this is a stock I'm extremely negative on. See, a couple of reasons. We need to look at three cases in an interconnected way. There was IndiaNivesh, there was L&T, and there was Z. Now, what is the common thread? The common thread is that in all these cases, there has been an NBFC company, which has been used to probably park all the debt of the parent company, and that's what L&T did. L&T tried to come out with a buyback showing just the debt of the parent company, not showing the debt of L&T Finance. So this is entire, I think, story is changing now. The whole practice of putting all the debt in your NBFC, showing your parent company is good, doing buybacks, jacking the price up, I think that's gradually getting over. So I would believe that we need to look at these three things interconnected, and any group company, I think, with an NBFC subsidiary, they're going to be in trouble. I think stock market is going to look at them negatively. In case of Z, I think there are bigger problems. There is a large chunk of shares that are pledged. There has been pressure coming from the financiers to kind of give some stability to the price. More importantly, I think they've been losing viewership. There has been a problem with Z as far as cash flows are concerned, and I think that the whole mountain of debt over 12,000-13,000 crores that the group has was okay as long as the NBFC could manage to keep rolling over the funds. That is not happening now. So I think that group is probably in a much bigger trouble than we can see at this point of time.
So you'll be out of it completely?
I'm out of it since I've been short on it from about 455, and I've been short on Z actually.
Okay. The other thing is going to be the kind of earnings reactions we see. We just saw Walk disappointed on numbers and crashed 8% in a matter of a few seconds. It's now down 9.5%. So earnings disappointments so far?
I would say that probably if you leave out Infosys and Larsen & Toubro, which are probably two stocks that actually gave a positive earnings. I'm not counting HDFC because HDFC has been a boring stock and it always gives 20%, so it's a boring stock. But if you leave these 3 or 4 stocks out, I think most of the others have either been tepid or they've been disappointing. So there is really not much of a positive cues coming from any of the other stock. And as you know, Walkart, it was really disappointing, and we need to look at ICICI numbers. That is one area where we are expecting a major disappointment. Those numbers will be coming out. So I think earnings, barring 3 or 4 companies, broadly have been disappointing. We don't see the overall number, but what we understand is that a combination of higher interest rates and higher oil prices are going to put a tremendous pressure on margins this quarter.
Okay. Now, by the way, it's not that there's selective moves in the Z Group stocks as well. Z Entertainment may be up, and bring up except for SL Propack, and let's not show that one because that's not an SL Group company per se. But Z Entertainment is up 14%. Look at Dish TV, Z Media, Z Learn, and very divergent moves. Dish TV, well, up about 7%, but a very choppy trade. Z Media down about 19% in trade. Z Learn down about 9%. And LKP Finance, which is now a Z Group entity, is down about 5% as well in trade today. So this one too has corrected quite strongly the last few days. LKP will come up on your screen. That's the fifth one, which is a part of the listed universe of the SL Group. And that too has corrected quite strongly in the session today. So 4 or 5 names which have just been rocked very, very badly in the session today, except for Z Entertainment and maybe Dish TV. The others are still languishing in the session today. A lot of other names, Hari, have gone off even despite posting reasonably good numbers. Sterlite Tech, a case in point. The numbers were above what the street was estimating. The ticker at the time of the release of the results was 295. It's currently at 260.
See, again, it's very hard to take a fundamental view on a lot of these stocks. We have to see how much of promoter stake has been pledged, whether there's been any promoter, any financier selling. Because what we have, we understand in the last 3 or 4 days is it is not just the Z Group. A lot of other companies where the financiers actually sold the shares in the market. And we could probably see, for example, I think L&T Finance saw some selling in the market. Wockhardt, which I think came out of the results, that has seen some financiers selling in the market. And Wockhardt has a very large chunk of promoter stake which is pledged to the banks. So I think it's now not going to be just about results. It's going to be a lot more, where there is too much of valuation pressure, where there has been too much of shares pledged. I think all these things are going. In fact, today Adani, I'm told Adani again is a case where there has been a big sell-off by a financier, and that is actually taped because Adani again has a very large chunk of shares that are pledged with the financiers. So wherever there are cases of companies which have pledged large chunks of shares with financiers, it's almost reminiscent of 2009, when you had this pharma companies falling about 75% in a single day. So we could probably have something like that, but I think what we are seeing is the beginning of that trend.
It's interesting. If you look at the Nifty 500 losers and just look at the quantum of cuts and the volumes at which they have fallen. Adani Power down 14%, significantly higher volumes. Adani Ports, yes, down about 10%. Divan Housing 9.5%. Indiabulls Ventures 9.5%. Devina highlighted Wockhardt about 9%. Max Financial 7.5%. Sterlite Tech 7.5%. And then the likes of Edelweiss, Praj Industries, etc. All of them have come off and come off very, very rapidly. So these are very large falls in the market, and some of the stocks haven't had bad fundamentals of late. It's just the correction has been rather very steep, and the falls have been on very, very high volumes. Hemen, if I can come to you on a couple of names which hitherto are looking strong but have just come off completely. I don't know if you highlighted them in your recommendation list or no, but one of them is Sterlite Tech, the other one is Praj Industries.
Well, Stertech has given a downward breakout from a symmetrical triangle on the monthly chart, Neeraj. Everything is in sell, and to be honest, we've been, at least technically, been negative since quite some time because it peaked in Jan. It's finished off a 4-year up move. So next 1.5 years, okay, we're just 1 year into the move. I think maybe another 6-8 months, there will be a bounce to correct this fall. But it's going to take some time, and we are on the verge of posting a fresh 4-quarter low. So it's going to take time, Neeraj. It doesn't look good. Coming back to Praj Industries, okay, Praj was different. Praj moved and then it's come off. But Praj, frankly speaking, is a bit surprising. It gave a 10-year breakout above 130 and it just fizzled off. So I know, frankly speaking, not much of idea on why it's done that.
TS, all the Adani Group stocks today are being beaten out of shape. Have you been able to gauge what's causing this sort of a panic selling in these stocks?
See, normally it's hard to gauge, but what we get to hear in the market is that there is, again, as I said, a major bank chunk that is being sold because I think these stocks have been correcting, and probably there has been some margin calls which the promoters have not been able to put in. So that is probably one reason why these stocks have been correcting so sharply.
Anything else that you're specifically watching out for? I mean, it's a turbulent marketplace, so you have to be very picky and choosy about what you do.
See, we have a clear rule now, I think stick to stocks that are low on debt. So we go back to our good old Infosys, TCS, which are low on debt. They could have cycles, they could have cash flow problems, they could have slowdown in the US market. But I still know that out of Infosys capital base, debt is not even 0.5%. So that is a comfort level that is there. I know Infosys doesn't pledge shares. I know TCS doesn't pledge shares. So these are the kind of comfort levels that you have with these kind of companies. So I would probably go back to companies where I'm not worried about debt, especially after the cases of L&T and IndiaNivesh. IndiaNivesh, we had a case where two of the SPVs flagrantly kind of defaulted on loans despite having the funds, because they said the parent has got an immunity, so I have got the immunity. So I think this kind of situation is not good for the markets. And when the SPV defaults, the mutual fund takes a hit, and all the NBFCs who invest in the mutual funds, they take it. So it's a kind of a big cycle. So we are very, very wary of any company that is showing uncomfortable levels of debt. So we would right now prefer to stick to stocks like Infi, TCS and Wipro, where there is no problem of debt at this point of time.
All right. TS, thank you very much for joining us. Really appreciate you taking out the time and being with us this afternoon.
Thank you. Thank you.
TS Harihar with his views. It's interesting when we talk about, investing in those larger blue chip names. I mean, taking a look at the kind of news flow, around so many of the Nifty 50 companies itself. And while there are issues in the broader market, but more often than not, I mean, the recent spate of events have just highlighted your larger names, where there was quality, where there is growth, where the brokerage reports are positive, but you had ICICI, you had Yes Bank, you have Sun Pharma, you have Z. I mean, the list just keeps on building up.
Yeah, and we're not even at the end of the earnings season as yet, so it's looking slightly ominous. And it's an interesting point to ponder on. We'll do that. Right now, though, let's focus on one more set of earnings that came out. RBL Bank reported an operationally strong quarter. Net profit went up by 36%. Asset quality front, gross NPAs and net NPAs remain stable, but provisions have seen a rise of nearly 15%. I had a chat with the Executive Director Rajiv Ahuja and began by asking him about the factors at play in the quarter gone by.
Yeah, so Neil, thanks a lot for having us.
Pleasure.
I think pretty much at the operating level, we've seen all our segments and vectors continue their progress. I mean, if you've seen our advances and deposits grown 35%, CASA inched up a little marginally higher. This has been obviously a tough quarter for the market, as you can understand. But I think in that, we've been able to grow our businesses on a much stronger footing. I think if you see the NIMs, an improvement of 4 basis points in Q3 over Q2 of this year, is a reflection of some of the underlying strengths of our business which are emerging. The mix of business has moved appreciably towards retail. We used to be under 40% retail. Now we actually closed this quarter at 43%. We were able to pass on some of the cost of fund increases in the last quarter to our clients. So comparatively, a lot better for us than it has been. And obviously, that's hopefully a signal of growing strength and presence of the franchise. I think from an overall, how we see this quarter, it's a stepping stone towards, equally strong performances in the next part of our, this cycle of planning. I don't see anything which is really out of the ordinary or untoward which could impact this trajectory. There are a few things which keep challenging, very specific to institutions, but we are now able to absorb them within our normal operating business without causing any dramatic flutters.
Interesting. You could have guessed my question, but any accounts which could become more suspect and therefore a worry for you, and which could be large enough? I think a few banks and few institutions are besieged with them.
Yeah, so we've been reviewing our businesses, not just now, but for the last several months. There's a very constant, review and monitoring cycle because, as you know, the underlying shifts in the macro and the micro are quite sudden, and so we've been doing a lot of this work even ahead of this. I don't see anything which is significant or material relating to few relationships or few accounts. I think on a macro level, we keep talking about the challenges on the agri sector, which we had shared 2 quarters ago. That is coming through into our P&L. So if you've seen some of the provisioning increase has been a lot around agri. But having said that, it's a very, it can be absorbed in a normal operating cycle and cost of credit. It's not going to cause a huge change in our direction. I think we continue seeing opportunities in our other businesses to solidify our comparative strength, improve the economics of our business, and do more for our customers. So nothing which is very specific, very urgent or immediate, which we see happening, which can cause us to change tack or slow down.
You had mentioned on the conference call the last time that while the cost of funds will continue to inch up, but increasing CASA mix will help you maintain the NIMs at the current levels. Your NIMs have actually done rather well. My question to you is, with the cost of funds scenario looking like it's changed a bit compared to what the anticipation was at the end of Q2, are we to presume that net interest margins could actually expand from where they are right now meaningfully?
Yeah, so Neeraj, we're generally quite conservative on our guidance, and I think for good reasons, because it's still a fairly challenging market. If you've seen, while liquidity has improved dramatically because several things RBI has done and rupee has been more stable, I think the deposit curve is quite steep, from the short end to the long end. So, and most of our deposits tend to be on the long end. So while I do agree with you that we may have seen the back of illiquidity, I think the cost of liquidity will still need some more monitoring for the next 2-3 months. I do think that for us, our cost of funds and cost of deposits will still go up in this quarter because there is a flow through which keeps happening. Having said that, I think we can take care of it through our management of our ALM, our MCLR, as well as the mix of businesses we have. So all of these three things, plus the slight improvement of CASA we've had in this quarter in a fairly challenging environment, gives us the confidence that we can defend our current NIM position even in a continued high cost of deposit environment, which we do expect, at least in our planning scenario, to continue for the next 3-4 months until it comes into the easy season policy, and we are going to see a lot more liquidity come back to the market. So that's the way we're planning ourselves. So obviously, if markets turn around much faster, it could help us, but I don't think we want to go back and be more aggressive on our outlook, and just say that we will probably maintain in this region from an overall NIM perspective.
Okay, any dramatic change in numbers? I mean, slippages, recoveries, write-offs, or they are par for the course? They've been largely in line over the last few quarters. Has it been any different this time?
Yeah, so I think pretty much the same. I think we've seen almost the end of our DeMont microfinance provisioning, which we stated will be almost done by Q3. I think Agri, while the overall number for the bank has been pretty stable, as you rightly said, within that Agri, as we had, been talking to the market that because of commodity prices, because of the waivers, some of these things do come onto our books as GNPAs. Maybe the full-blown, recovery through the waiver policy might take time. So that, I think, gets reflected, which is what happened last quarter, this quarter too. And my suspicion is this fourth quarter will see some of that. Notwithstanding that, I think overall cost of credit and GNPA will be in the same ballpark. I think we've pretty much been able to absorb these significant challenges on some parts of the business for the entire banking system.
Okay, my final question, Mr. Ahuja, and I remember in a conversation that we probably had 9 months, 12 months ago, when the going was good for the space at large, and you had predicted that 30-35% growth, odd loan growth for you as a bank will not be an issue for the next foreseeable future. With the change in the way, or with the way things have shaped up in the financial space, are you revising that, or do you believe that there is ample room and therefore comfortable for quality players to grow at those levels or maybe higher?
Yeah, I think, Neeraj, at our base and our capability and capacity we've created, I think that ballpark will continue at least for the next 4-6 quarters. I mean, I don't think we've revised our guidance for 2020 and beyond. 2020, we are still maintaining that.
On track.
I think, yeah. So I don't think that's any change. I mean, if you even see the internal metrics which we share with you all, and is there in the presentation, all our segments are growing. Some of them grow a little slower in some quarters, some a little faster. But overall growth has been in the 30-35 ballpark, in fact, towards the higher end of that range. I don't think there's anything which is going to change this momentum, at least till the middle of 2020. We will come out with a a new planning cycle vision, and then we'll be able to share with you. Obviously, as base becomes larger and larger, it's prudent to also look at the absolute amounts you're putting on. But I think for the next 4-6 quarters, we are in a comfortable zone as far as growth is concerned. Having said that, Neeraj, we are very clear. Growth cannot be at the cost of quality of risk and the unit economics. I mean, given that we've spent a lot of time and effort building all our engines, we have to derive better returns for all stakeholders. So we will find growth, but that growth has to come at our quality of risk, high, parameters, as well as the economics of doing business, which we think we are getting better at, increasingly.
$18,500 गांवों में 1000 दिन के अंदर बिजली पहुंचे, ये काम पूरा करके दिया जाए।
केंद्र में मोदी सरकार और राज्य में देवेंद्र सरकार आई, में हजारों लोगों ने आत्महत्या की है और दूध का जो रेट पहले मिलता था पुरानी सरकार में, उससे भी कम हो गया है।
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
All right, 32 minutes left to go for market closing, and that's what you've got on the index. It's come off the day's low, but still looking extremely weak right now. For the broader market, the picture is slightly more grim. We're down more than 2% apiece for the mid caps as well as the small caps. Let's take a look at what's been happening in the rest of the world, and particularly Europe, and if there are at all any trading cues to pick up from there. So FTSE CAC DAX will come up on your screens. About 0.5% given up on the CAC. The DAX looking weak by a similar amount. So nothing much happening there. There is weakness, but not to that great an extent. Dow futures are also down closer to 0.5%. Taking a look at the turnover numbers and what the volume figures are looking like this afternoon, you would anticipate them to be slightly higher this afternoon. Already 30,000 crores on the cash side. We still have half an hour to go, so you'd probably see that number nudging closer to 34,000, 35,000. On the futures and options side, about already 8 lakh odd crores is what you've got. But remember, this is the expiry week, so on a daily basis, you will start seeing that number starting to see some inflation as well. 8,32,000 crores in totality. We still have our guest with us, Sumeet Bagadia, as well as Hemen Kapadia. Just wanted to get in some chart checks going. And Hemen, we've been talking a lot about HEG and Graphite India, and how those two stocks have collapsed completely, 35% given up in a matter of 2 trading weeks.
It had to happen. You can't have a stock going up some 100 times and then not correcting. It's, I mean, they were waiting to be kicked and that's happened. So not at all surprising, very much expected. Well, the quantum and the speed is sometimes bamboozling, but I mean, that's how markets are supposed to be. So not very surprising. And yeah, it's going to take time. I mean, the new highs don't come in for a long time. We've had multi-year run-ups, Devina, and they've multiplied at least 10, if not 20, 50 times. So what's there for the asking?
Yeah, I'm just looking at the PE. The valuation of the last 4 quarters has been about, for HEG, has been about 8.13 times, and the projection is 2.9 times in FY20. So that's the kind of difference we're talking about, and the way the stock has been pummeled is a clear indication of that as well. I mean, the inflation of the valuations versus what's been happening now. But I wonder whether the pressure is that much more than what it looks like, because we're talking about commodity price pressures which have been witnessed across the board. Graphite electrode prices not been increasing in the recent past. But to what extent does that have a bearing that the stock needs to be punished the way it is?
Yeah, and I don't know, I think with some of these commodity names, it's probably difficult to gauge as to what the earnings impact over the next couple of quarters could be like as well. The best of the guys have gotten it wrong.
Because commodity price gyrations also have their own bearing. Because of the volatility, the impact could be quite significant.
Yeah, so lots of chatter typically around HEG and Graphite India on most social media platforms. Not surprised, because they were fairly much the point of conversation amongst a lot of people. But yeah, the last few days, the fall has been rather disconcerting. So those stocks continue to grind lower, and as we speak, Adani Port is trading around the lowest point of the day. Actually, not the lowest point of the day, but the lowest point over the last couple of hours, at least down about 11%. So that is looking wobbly, and a clutch of other index names. The index is down just about 1%, but you could argue that that is also in large part due to the kind of gains that the Nifty IT is put up, which is up 1.5% for most of the names, and therefore that's giving a bit of a helping hand. And stocks like HDFC Bank, Kotak Bank, Reliance Industries haven't really cracked too dramatically, and therefore these falls that we're seeing in NBFCs and Adani Ports and the likes are being cushioned. Sumeet, Bagadia, just one call before we get to the next guest, and that is on Ultratech Cement. While we're looking at a lot of financials go off, this one too, the third day on a trot now, has corrected and corrected strongly. How do the charts look here?
Well, this support for the stock is placed at around 32.50, 32.80 levels. If the stock is able to hold this stock, then we will see a bounce back or pullback move. At the same time, stock is resistance at around 3,500 levels. Once the Ultratech Cement is able to break 3,500 on closing basis, we will again see upside move till 3,800 or 4,000 levels. Immediately, the stock looks weak on charts. There is a possibility that we might see a move till 32.80 or even till 32.50 levels. Till the time closing is not seen above 3,500 levels, it's better to be on sell side. A closing over 3,500 level will take stock prices to higher levels, and at present, this stock is weak.
Okay. Speaking of cement, we spoke to Murtuza Arsiwala of Kotak earlier. He says that the muted guidance on price hikes from cement makers is likely to be more problematic than earnings. In a chat with us earlier today, he also spoke about the factors that are making it difficult for cement makers to hike prices. Listen in.
I think more than the result itself, it was the management commentary which sort of spooked investors, if one were to go by the results. Essentially, there was expectation, and having looked at the sector for a long while now, we haven't seen a period where you've not had price increases for such a long sort of dry spell, so as to speak. And management commentary, opening commentary from the management was on the lines of the expectation on price increase was far more muted. And this is coming in January, which is sort of, the start of the new construction season. Typically, Jan to March, April is when you see a lot more construction activity and a lot more pricing movement. And that's sort of what spooked the investors, to my mind. What it really leads to is essentially the expectations from earnings, because there's a very high leverage to pricing as far as cement sector goes. So those expectations being toned down, further consensus estimates being brought down, and that's essentially what you saw in terms of the stock movements.
Okay. Do you see this as an issue that is going to linger until the print from the companies shows otherwise? Because hitherto a lot of people have been hoping for return of some pricing power, some bit of capacity utilization levels moving up. Now would you take a call on what happens to the cement companies' fortunes after they show it in the data, in the reported data?
Not necessarily. I mean, if you look at cement, as a sector, if you look at the stocks, essentially, typically on a monthly basis, you have sort of price revisions, which have been elusive, which have been muted. In some cases, we've seen that price increases have been taken, but rolled back. Definitely a more confident statement would come in when you see it in the print data, but there is enough, sort of channel checks, dealer checks, which on a more sort of frequent basis let you know as to how the pricing is behaving. We've not seen very aggressive price movements even in January. We'll have to see what sort of February holds for us. But I think investors tend to look at it on a monthly basis, and I think we would look forward to what's happening in the next 2 or 3 months. If we have a continued dry spell in terms of lack of price increases for another 2 or 3 months, you'd probably start looking at, late summer, starting monsoon, and then you'd really push back for another year. And, the earnings which have been downgraded over the years will essentially add another year to that tally.
Okay, interesting. No, the reason I asked this question was that, so Ultratech, for example, they expect about 7 to 8% YOY demand growth in FY20 after a subdued Q1 FY20 as well. Maybe till the time the elections are out of the way and then the monsoons, the numbers might not pick up. What is your base case for this? And therefore, my question is, even if managements were to paint or experts were to paint a better demand scenario for the second half or the last 3 quarters of FY20, would somebody go out and believe that or wait for some early signs before taking a call?
I think so. What's been happening is with the cement sector, you've had a spate of bad news over the last 9-12 months, where you've had constant cost increases, you had no price increases. Volume was your sort of sole savior. So volumes have been rather healthy. Probably going into the election sort of period, you may expect some sort of subdued activity on the volume front, but overall volumes have been healthy. Now the good part is on the cost front, you have seen things improving. Crude's coming off, petcoke, imported coal, all of them have begun to ease, and that delta will come in. All said and done, if you were to see some price increase come through, there will be an element of cheer essentially on the stocks. Having said that, the bigger problem with the sector has not been the lack of demand, but it's been the continued sort of oversupply situation, which we do not really see very dramatically changing. So, while you've been at the receiving end of things, with the lack of price increases, a price increase would definitely help bring some respectability to earnings. Costs are improving. The utilization rates are not going to dramatically change. So you will be sort of range bound in that sense, where you may have some price increases, but there's not going to be a tearaway sort of quarter that's coming ahead of you in that sense.
All right, Murtuza Arsiwala, they're talking about the cement space as a whole. Bringing in Dharmesh Kant of IndiaNivesh Securities is joining us on the show this afternoon. Dharmesh, good afternoon to you. What would the stance be now? It seems like we are entering a fairly volatile period, and it's a little bit uncertain with regards to the kind of moves that we are seeing specific to the Nifty 50 stocks. Heavy gyrations and the kind of steep cuts that we've been witnessing have been a sentimental dampener.
Yeah, good afternoon. Yeah, in such kind of a market, everything is painted with the same brush, and the type of sharp fall we saw on Friday closing hours and the continuity today does portray that volatility is here to stay, at least till the budget or the RBI policy. So couple of weeks of volatile movements to be negotiated, but I do think this fall in the market is again a good buying opportunity, because if you look at the numbers so far has been really good. They have been coming very pretty strong set of numbers from the BFSI segment as well as from the consumption theme. So those are the pockets to watch out for, to be bought into. Maybe one can wait for 3-4 more days, or if till the time the budget is rolled out, because even if you miss 4-5% from the lower end of the range, it doesn't matter, because from there on I do think the market will stage a good comeback rally. So plenty of scope and plenty of good investable ideas will be available at a more cheaper prices. So overall I do think fundamentally the market stands on a strong footing. But yeah, some news flows, some rumors are doing the rounds, and that is why you are seeing a sharp selling happening in the market.
Okay, 14% for Adani Ports. Dharmesh, what are you hearing on the grapevine around the Adani Group stocks cracking today? Is it pledged shares, or is it some other meat by some media house or something else?
I think it's primarily to do with the pledge shares, because once a theme plays out in the market, so everything falls into the same line. So earlier it was G Group where the pledge shares became a question mark, and then we saw a sharp fall Friday itself. And today all the companies which are having their shares substantially pledged by the promoters holdings be substantially pledged to have the liquidity flow coming in, they were down. So Adani has been in the same bracket, and that is what it has resulted into. We did a sharp back of the envelope calculation. So around 27-28% of all the companies in the Adani group, the promoter shares holding have been placed, which amounts to 10:30, 11 o'clock time when the valuation was there, 39,000 crores. So it's a substantial amount which is placed in the market. So any liquidity crunch out there will have a cascading impact. So these worries keep on plaguing the market. Earlier it was ILFS, and now this kind of things are doing. So my own sense is that this will not play out into a financial crisis. It will be negotiated by the companies which have been in this scenario, and sanity should prevail sooner than later.
Z, it's up 17% today after the falls of the last few days.
Yes.
If you believe that things will get sorted out, are you a buyer in Z?
You're asking me, Neeraj?
Yeah, I'm asking you, Dharmesh. Do you think that Z could be a stock to worth looking at?
Yeah. Till the time the things are, as far as Z Limited is concerned, the type of business they are running, the price does look very attractive to me. But at the same time, I would wait for the entire clarity to emerge on the fundamental ground, because when such things happen, it's just not out of the blue. There is some substance to it. So let the substance be settled down by the promoters and the lenders concerned. So once the clarity emerges on that count, then only I would be a buyer in Z Limited or even the Adani Group. Till that time, one should watch it from the sidelines.
Okay. Well, that's Z. That's the lone ranger today. Otherwise, the clutch of stocks have fallen quite convincingly. By the way, Yes Bank is the other one, which is down about 5.5% in the session today. So that too has cracked. Before we get to dealers, Hemen, a word on Yes Bank that was looking stronger from the others because of those individual announcements, but that too has cracked 5% today.
I think it's more of a contagion effect, Neeraj. But DHFL and Yes Bank were all similar. They had fallen off a cliff. They were consolidating, moving sideways. In fact, Yes Bank was to have made a base. It not exactly, but it made something like a rounding bottom, which was the consolidation, and now it's come off. But I wouldn't read too much into it. I think 180 is important. 160 is far away. When 180 breaks, I think it would be a cause for worry. 147, 245. Maybe I think it's profit booking coupled with the market pressure.
All right. We'll come back to talking about a few more stocks with Hemen as well as Sumeet, Bagadia and Dharmesh. But let's take a look now at what dealing rooms are recommending this afternoon. We've got Yatin Moza and Darshan Mehta, both of them here with us with their channel checks. What have you guys been picking up? Darshan, let's start off with you.
Yeah, so the big number tomorrow will be Bajaj Finance. No doubt the counter has actually seen a big drop today. It was down almost 10% at one point of time, has recovered from the lows of the day. But nevertheless, the word on the street is that the numbers, the profit number at least, and the financial performance will be much better than what the street is anticipating. So we'll be watching out for Bajaj Finance. No doubt it's down in today's trade. Titan also, dealers indicate that there is weakness. There is selling pressure that's coming in. Not very heavy selling pressure, but nevertheless, some of the domestic mutual funds are pairing stake in Titan. So that's something that's been watched about. And the last stock is Dr. Reddy's Labs. Again, has been one of the strong performers of late, but there is selling pressure that's seen. There is enough competition that's coming in on Suboxone. On Friday, we spoke about how an authorized generic was coming in. Today, more competition coming in. No doubt, right now, Dr. Reddy does not have the permission to launch this drug, but nevertheless, the worst case scenario seems to be playing out, where more and more competition comes in and the golden opportunity seems to be diminishing for Dr. Reddy. So that's the big concern for Dr. Reddy's. But Yatin, what are you hearing?
The first stock to talk about is ICICI Bank, and you look at most of these private banks have corrected 10-12% from the recent highs. Dealers do indicate that at lower levels there is buying in private sector banks, including the likes of Axis Bank and ICICI Bank. So watch out for this one. Dealers expect some bit of bounce back after the recent correction that we have seen, especially in ICICI Bank. Z, of course, we have been talking about this since the morning, but dealers do indicate that there is a lot of short covering which has started to happen post 2:30 p.m. today, and they're expecting the short covering to continue as far as Z is concerned. So watch out for this counter. It's almost at the day's high right now, with volumes of over 11 crore shares already there in the cash market. And finally, Castrol is one stock wherein ahead of the results this week, HNAs are said to be buyers at lower levels.
All right. Yatin, thanks very much for that. That's a quick update on what dealing rooms are talking about this afternoon. Z is up 16.5% now. SL Propack is up about 12%. Dish TV has moved up 6.5%. And then Sun TV, which was Hemen's call right now. Target was, I think, 531, which was revised to about 536. The stock's trading somewhere at around, I think it's hit its target and come back.
540. Is it overshot?
It overshot its target and came back. DLF is up about 3.5%. Indian Hotels 3.25%. And these are just some of the names of the gainers in today's session. Far and few, but as we have it, should pull up the advanced decline ratio right now to see the kind of market breadth and depression that we're seeing. Advances of 250 stocks on the NSE advancing versus 1,300 stocks which have declined. Linde India, that continues to grind lower. That's down 13.7% right now. And should pull up the last 7 days performance of Linde, last 1 week's performance of Linde. Post those hurdles coming in with regards to its delisting. Stocks down 35%. So while we're talking about HEG and Graphite losing this amount in 2 weeks, Linde has done it in a matter of 7 trading sessions. It's down about 35%. Indiabulls Ventures is down. Sterlite Tech is down about 8% odd. Last 7 days is lost closer to about 9% odd. Zealand is down 7%. 30% in the last 7 days. Praj Industries continues to grind lower, 7% under. Last 7 days is given on 21%. So not looking good for some of these names right now. Sumeet, anything that you've managed to spot in the last few minutes of trade?
Most of these stocks are looking weak to me. I think immediately SDFC Life has given good bounce back from lower levels. There is a possibility that we might see extended move in SDFC Life. It has taken support at around 353, 355 levels. Till the time these levels are not taken away, it's better to be on buy side. At the same time, if SDFC Life is able to break 370, 71 on closing basis, then there is a possibility that we might see a move till 390 or 400 levels. I think it's better to be on buy side in SDFC Life. One can initiate long positions at the current market price of 365 with the stop loss to be placed at 355 on lower side for the upside target of 390 and 400 levels.
Okay, stocks which have cracked in the last few minutes of trade include an Intellect Design Arena. That one is down about 7%, but a steep fall of sorts coming in the last few minutes of trade. Jet Airways, which has corrected another couple of percentage points, so now down about 3.5%. And Piramal, which is down 6%, but a bit of a fall coming in the last few minutes of trade as well. About 1.5% for that one too. So do watch out for those names. Not that the markets have cracked too much even further, But yeah, a lot of stocks coming off in this session in the last few minutes of trade. The Nifty Bank too, at about 500 points lower, has looked particularly wobbly in this session. Before we hear a veteran investor speak, let's just get in closing strategies from our experts. 12 minutes to go for trade. Hemen, your top closing strategy.
It would be a sell on STBT on HDFC Bank and a buy on Hindustan Zinc.
Yeah, here a sell on HDFC Bank?
Yeah, sell HDFC Bank and buy on Hindustan Zinc.
Okay, so 2078, 2080 was looking like a key pivot if I'm not wrong?
Yeah, that it's broken the last 5-6 hours low, and 2080 is what you're talking about. Yeah.
Okay, so HDFC Bank, a short call from Hemen. What about you, Sumeet, your top call?
STBT from my side too. Just Dial is looking weak to me. It's better to be on the sell side in Just Dial. It has given a breakdown. One can initiate sell positions at the current market price with a stop loss to be placed at 470 on high side for the downside target of 430 and 420 levels.
Okay. Interesting. Let's hear into what veteran investor Mark Mobius has to say on pockets of opportunities that he finds in the Indian markets and his expectations from this year's general elections.
Consumption-related companies that have very interesting. We found a number of companies that have a very big position in various consumer products at the manufacturing and wholesale level, but they don't have a retail presence. They don't have a brand. Now these companies, having a very good return on capital, lots of cash, are building their own brand. That to us is very exciting.
But don't the steep valuations raise some question marks on whether it's the right time to invest? Because they're not cheap.
Well, the valuations, yeah, well, it's true. Some of them are not cheap now, but if you look at the growth going in, we look at a 5-year time frame, they're going to do very well going forward. You're going to see the PE levels going down.
Right. Mark, the last time we spoke, you were talking about your fund and a few hurdles that you had because you have a pool of money that you want to invest in India, but, the regulatory hurdles are restricting. Has that been addressed? Now are you being able to invest in India? And what kind of money do you think that you are ready to put in terms of just not the quantum, but if it's a big sum, you know that there is a growth opportunity there which you want to capitalize on?
Yes, we've solved the problem with getting into India. We've got the approvals for both the funds. We have 2 funds, and now we're investing in India. We've raised between the 2 funds 150 million, and of course that's growing in US dollar terms. So we're going to put a significant amount of that into India.
Right. Anything else like what? Consumption and the non-banking financial space. These are 2 pockets that I'm assuming that you're interested in investing yourself. But aside from this, any areas where you feel that they were ignored up until now, but they have the potential to be multi-baggers and you would like to invest in them?
Yeah, there's some companies that are in the middle of this service, computer service industry. Of course, you have Tata at the top. Then you have a multitude of smaller companies that have been servicing some of the large global companies in the software area.
Okay, that's of course veteran investor Mark Mobius, and the whole conversation and the story around this conversation there on the website bloombergquint.com. So do log on and try and hear what the veteran has to say with regards to India currently. But you got in closing strategies. Let's get some final thoughts from our experts. Dharmesh, from amongst the Z group stocks, we spoke about Z, the others, and one is Dish TV, which has bounced back a little bit, but the quantum of pledge is very high. I don't know about Z Learn, maybe you've tracked it. And one is not a related group company, but owned by the brother having the same name, SL Propack. Any thoughts on any of these 3 names?
Yeah. Not really, Neeraj. I think right now nothing to be touched because G Limited was the only company which was delivering good set of numbers. SL Propack used to deliver good set of numbers, but somehow went into a trouble. Yeah.
I think it's a pertinent point. So no comments of sorts. I don't think Dharmesh has any liking for any of those names right now. Adani Power is down 19%. Divan Housing 11.5%. Indiabulls Ventures 8.5%. But it is, and Sterlite Tech, by the way, breaking 260. But it's essentially Adani Power, which has been taken to the cleaners. The grapevine is about maybe some news bits coming out on this set of stocks as well, because that's what almost everybody who's messaging me is talking to me about. But clearly, a lot of pain points out here. 19% off for Adani Power in the session today. It's a fairly liquid stock. Sumeet Bagadia, would you trade Adani Power?
Adani Power?
Yes.
See, Adani Power has given a good correction today. It has given a breakdown. Stock is looking weak on charts. We feel that from here on there is a possibility that the stock can move down and touch levels of around 34 or even 32. I think it's better to be on sell side in Adani Power. One should avoid long positions. Stock is looking weak for the targets of 34 and even till 32 levels. High side, the stock is resistance at around 43, 44 levels. Till the time these levels are not taken away, it's better to be on sell side.
For these two stocks, anyways, in the F&O ban, so not much of new positions that can be taken, at least on the futures and option side for Adani Power and Adani Enterprise. So,
okay.
And even walk hard for that matter.
Okay, so well, that's an update. But Hemen, on Nifty Bank,
26.6 seems to be an unlikely support, but has worked. Hourly charts, the MACD is giving a buy. I have a feeling we are setting the stage for a recovery from here. Unsustainable, nevertheless, a recovery, yes.
You should pull up the IT index right now. That's probably the only one that's lending some sort of a support. Nifty IT index, which is actually at the highest point of the day right now, is 0.7% higher. And last week itself was the only sectoral index that probably had gains of closer to 1% when the rest of sectors were down anywhere between 0.8 to 1.2 odd percent, ranging from your banks to real estate to FMCG, which was a key drag in last week's trade. Whether that changes into this week, we'll have to wait and watch. But stocks like ITC, HUL, these were the stocks that saw some heavy selling pressure last week. Would you take a trade on any of these names, Hemen? HUL, ITC?
From a very short-term point of view, I think the entire market is probably setting the stage for a bounce back. But if I were to compare HUL and ITC relatively, ITC is closer to supports, and HUL looks a shade better on the hourly charts. But no, I would avoid them and look at TCS instead.
Okay, looking at TCS. Dharmesh, would your call also be right now to stick to some of these defensive names which are outperforming the index and outperforming some of the other sectors? That's where your money is going to be?
Yeah, definitely, because even if you look at the numbers point of view, they posted with a very good set of numbers. TCS was an outlier into the IT space where the numbers were actually good. At the same time, if you look at HUL numbers, second consecutive quarter of double-digit volume growth with a price realization also coming into the place with the blend realizations up. So I think I will stick to them in this kind of market scenario. Capital is protected. At the same time, you get some kind of a price appreciation. But to my mind, HUL remains a long-term fundamental buy, and we have a valuation target of 2,400 on HUL based on FY21 earnings estimate. So that's a good buy.
okay, we let it go on that note. Dharmesh, thanks so much for taking the time out and being with us and giving us that perspective. I really appreciate your time. Sumeet, maybe you won't have a trade on Adani Power, maybe a call on Adani Ports. For somebody who went short, would you carry home the short positions on Adani Ports? Sumeet?
See, you're talking about Adani Port?
Yes.
Yeah, see, Adani Port is also looking weak on charts. I think till the time the stock is not able to break 350, 360 levels on higher side, it's better to avoid long positions. Today, after a sharp correction, it gave some pullback from lower levels, but still the structure is not good. It seems that from here on there is a possibility that we might see a move till 310 or 315 levels. So it's better to be on sell side in Adani Ports.
Okay. Stay on, Jamin. We'll just get in final thoughts from you. But the markets in today's session quite ominously placed, even though we just corrected about 1% on the headline numbers, which is the Nifty and the Sensex. The Nifty Bank off the lows of the day, about 1.5% versus almost 2%, but still the momentum or the sentiment looks terribly weak. NBFCs have been taken to the cleaners, to be honest. Mid caps and the small caps, a lot of cuts there. The market has looked vulnerable today, and no surprise here, 2% down for the mid cap space. The small caps almost 2%, quarter to 2%. Let me talk about the large caps first. And Z Entertainment is the only one, and it's a bit of a bounce back. Aside of that, Coal India, Bharti Infra, TCS, yes. TCS is a noteworthy name, an addition out there. Larsen & Toubro, a bit of a results reaction. But as you can see, nothing else, and pretty much very little giving support. But the losers, Adani Port, 12.5, Indiabulls Housing, 6.5, Bajaj Finance, symptomatic of, these two are symptomatic of what's happened to the NBFC space today. Yes Bank and ICICI Bank correcting quite strongly today. And then others like Cipla, Grasim, BPCL, Ultratech and Grasim clearly showing the weakness that is there in the cement majors. Grasim falling as a result of the fall in Ultratech. But, well, if large caps have shown cuts, I think select mid caps have shown carnage. Devina, strong cuts, very high volumes.
Yeah, and we're using strong words to describe the kind of move that we have seen, but so be it, because you've seen price cuts of about 15 to 20% in some of these names, so it's warranted. I mean, looking at the index itself, they've been out close at about 2.5% for the mid caps as well as the small caps. I'm going to start off with a few names, one being Linde India is the first one that I want to talk about. The stock has seen sharp moves over the last few trading days since the hurdle with regards to its delisting. Stock's down about 13% in today's session, but in the last 7 days, the stock's lost 35%. Adani Power, we already spoke about that, and Adani Ports within the index is lost as well. HEG and Graphite, these two stocks, the last 2 weeks have lost about 35%. The continuous grind low on the back of a rise in raw material prices and also the softening on graphite electrode prices, which is not auguring too well for these two. Indiabulls Ventures loses out to some from the NBFC space like a Divan Housing Finance and Edelweiss. You've seen, the boats getting rocked out there. Walk Hard reported numbers. You saw the net loss of 71 crores coming in there, and no, they've not been spared today. So you've got that, seeing that sharp drop in intraday trade, finally closing 7% lower. L&T Finance again and M&M Finance, both of these from the NBFC space have lost considerable ground. Among some of the gainers, and you would like to highlight some patches of green in a day like this. So you've got the stock like Indian Hotels, and that shut shop with about 3.5% gains. Crompton Greaves does well from the IT pack. You have Emphasis, which closes with gains of about 2%. Sun TV, and this was Hemen's strategy as well, his call for 536. It took down that target, finally closing somewhere around 527. And the Tata Global Beverages too does well in intraday trade. So that's the market picture for you this afternoon. Nothing much to say on the index in terms of the quantum of cuts in the broader markets as well, but it's been tremendously weak, and the advanced decline ratio itself, 1:7 almost, is the kind of breadth that you have in the market. Yeah. So that is a really concerning factor.
Yeah, it's not looking good. 1:6, 1:7 in favor of the declines, and the volume should come up. Let's bring up the turnover picture and see how the cash market volumes have looked. Well, 35,000 crores. You could expect this because it's expiry week, but cash market volumes at 35,000 crores is pretty high. So I remember in Friday's session, we actually saw the FI number being net positive. It'll be interesting to see what happens today. I was a bit surprised and a bit perplexed, maybe due to some bulk deals or otherwise, but very interested to see what the number in today's session could be like as well. So do watch out for this one.
Contributors should come up on your screen for the index, and there's no surprise there what is gained and what is lost out. So today's recovery came in the form of Z, that recovered almost 16% towards the end, and IT, L&T obviously on the back of good numbers, some respite there, and TCS at the top losing out. Reliance Industries making its weight felt on the downside. ICICI Bank and HDFC losing out too.
Well, all in all, a tough day of trade. That's the only way to describe it. Final thoughts from our experts then. Sumeet Bagadia, what levels would you watch out for tomorrow morning?
I think 10,700 is the immediate hurdle for Nifty. Once the Nifty is able to break 10,700 on the higher side, one can initiate fresh long positions. At the same time, Nifty has support at around 10,600 and 10,580 levels. If these levels are taken away, then we can see extended sell-off. Till the time these levels are not taken away, Nifty will move in a range, and above 10,700 we will again see a upside move. So I will wait for the levels, and either side breakout we will take the positions.
Hemen, are you looking for immediate hurdles, or do you reckon that this could be some more downside even if there were bounces?
Yeah, I think I'd wait for the bounce through short, but yeah, some more bounces before it goes down further.
Okay, but lower levels firmly visible.
Yeah, somehow if this settlement is saved, but yeah, lower levels, yeah.
Okay, that expression says it all more than the words really. But Sumeet, Hemen, thank you so much for joining in today and giving us your thoughts. Really appreciate your time. Weakness today, likely to have some bearing on trade tomorrow as well. With that, it's a wrap on this leg of Countdown from Devini and me and the team that put this show together. Thanks so much for watching.